In this video, I'm going to show you the exact same strategy I use to teach all of my students and my TWS community how they actually got paid out, and also something that I learned from a lot of my mentors within the past 6 years of trading. This same concept is designed within Elliott Wave, learning whack-off theory, learning ICT concepts, learning smart money concepts, and pretty much all the above that you can think of. But I figured out a way to make this super simplified for a trader like you that's looking to grow a small account or scale your prop firm account, or even get payouts if that's something you want to do. As you see, a couple of our students right here actually got payouts thanks to what we're doing in our YouTube as well as in our TWS community. So I want to share a really good method of how this will work for you as a trader. Now let's go ahead and get to it. So as you guys look closely, we have the 3-phase method, solo sniper setup for explosive trades. Now, before we get started in this, there's a couple things that we will need in order to make this seamlessly. One is TradingView. TradingView is where we're going to do all of our marking up the charts, of course, and analyzing everything. Additional to that, Solo is what we offer as far as what we're doing in our trade with Solo community. And then also for anybody that is looking to use this concept, I highly recommend going with Board Funded because they do allow you to scalp if that is something you guys want to do. Otherwise, you can go with Henko Trade, which is a personal account if you're looking to trade personal funds as well. So now after that, let's talk about the phases. So phase 3 method components, which is the 6 pillars that you guys need to know as a trader. Number 1, liquidity grabs trigger setup. So you have to first understand that when you're trading this concept, you're basically trading the beginning of wave 3 in Elliott wave theory, which is the end of wave 2. Now, for those that don't understand what wave 3 is in Elliott wave, it is essentially the longest wave in a trend, rather if it's up or down. In theory, there are essentially 5 waves inside of an uptrend and also 5 waves inside of a downtrend. And the best way to capitalize off this is taking wave 3 to scale your account. And this is what we do every single time to grow an account. What you need to do is wait for the markets to sweep prior highs or prior lows. So in instance, if you're looking at the market right now, you see that we have our high here and we have our low here. If you actually pay close attention to this, this is essentially wave 2. Now, wave 2 is always going to be a correctional wave known as a pullback to a lot of traders. When you see this move right here with these 3 candles, this is essentially wave 1, which is the very first move to the upside if it's an uptrend. And then wave 2 is the first correction within the uptrend, which is known as the pullback. And then the third wave, which is this one right here, is the second wave to the upside if it's an uptrend. And then the fourth wave is another corrective pattern, which is the second corrective pattern. And then the final is wave 5, which is the last wave to the upside. We have to wait on market to sweep prior highs or prior lows, meaning if market created equal lows or equal highs, we need to see it sweep out, because this will identify that the buyers are now coming in the market and the sellers pretty much took out all, really the market makers took out all the sellers out the market. As a Elliott wave trader, this is a indication of getting in super early when you get into wave 3. So in order to really capitalize off of finding the perfect entry, you need to wait on that liquidity sweep. And then when you get that liquidity sweep, you can take this buy. Real quick, I know you're learning a lot from this breakdown, but if you're tired of doing this along by second guessing, trading along, not having the proper setup, missing all these entries, and even feeling FOMO, I'll build something for you. Inside our Trade with Solo community, we just launched a new Algo trading system that helped over 10 plus traders get their very first payout with different prop firms. And this isn't signals. This is a system that we use to help traders get real payout. And we're talking anything from our Algo trading system to the trading plan that we created to all of the games and the competitions and everything we created inside of the Trade with Solo, from the education that we even teach you. So if you're ready to stop trading from emotions and trade with actual structure, you need to be a part of Trade with Solo community. Live calls, real setups, proper execution, the right mindset, and all of the tools you need from our Lock It Trade journal, from our Algo trading system. Everything else that we teach in the Trade with Solo community is here for you. So just hit the link down below, tradewithsolo.com, and I'll see you inside the Trade with Solo community. Other than that, let's get back to the video. Now, the next part we have to talk about is mitigation and momentum shift. You want to look for price to return and mitigate a key level, known as a breaker block, imbalance, order blocks, major key levels, institutional levels. The list goes on. if let's say right here is our breaker block, our order block, our fair value gap, our imbalance area, whatever it is you guys want to look at for structure, it has to mitigate this area. Essentially what that means is there's orders that's been pending here, like an order flow of a lot of orders that needs to get fulfilled, unfulfilled, and just wiped out the entire market. In order for that to happen, market wants to first come to this area, which is known as mitigation, and mitigate all these orders. So then now when that move happens, you're pretty much in the right to get in that perfect setup, because this is kind of like your indication of knowing how far the market could pull back to before you get in the trade. Watch for momentum candles or watch for a structure shift. One thing that we do a lot in the Trade with Solo community and also on my YouTube channel is we go into heavy price action. And I talk about this a lot, even in my live streams that I do. You have to look at a lot of these small wicks because wicks does give you that momentum as far as price action. And then when you pay attention to even the candle in depth, meaning the depth of the candle, meaning how large is the body more aggressive than the wicks? If it is, that clearly indicates that there's strong momentum in that candle, whether if it's red for sales, whether if it's green for buys. There's still strong momentum, and that indicates that the buyers or the sellers are ready to get in the market because it already mitigated this entire order flow, or once you guys call it order blocks or whatever you want to call it for structure, it mitigates that area for you then now to take that move. So you look for price to return and mitigate a key level. And then once mitigated, watch for the momentum candle. Now, once again, want to get into it. Mitigation is where price returns to a key institutional level, like a breaker block, an order block, or imbalance, and so forth. That was involved in a previous move. This is smart money reloading, not retail jumping in. So once again, pay close attention. Let's say on a higher scale, this is a supply demand level or a breaker block or OB zone or imbalance fair value gap, a major key level, and so forth, right? Market wants to tap back in here because there's a lot of orders that needs to get fulfilled. So eventually, if we can catch that move where market pulls back to this area, catch that, and then we can go ahead and get in that move. Because one of my confirmations that I do look for is to pull back into an area where it needs to get mitigated. And then I look for the momentum candle. Momentum candles for me is wicks. I look to see how large the wick is. I also look to see how large the body candle is. And I pay attention to the previous candles as well. Meaning, if the previous candle had a very large wick and the body was not that aggressive, but then this was a very aggressive candle, clearly shows momentum was weak. Now the buyers are strong. Means in my mind, since the sellers are weak and now this candle identified an engulfing candle, this is actually an entire candlestick pattern without you even knowing it is, because you understand more of the momentum. When it comes to momentum, your idea of momentum is paying attention to the wicks, the body of the candle, and the previous candles. And that right there is how you find really good entries, just using pure price action and momentum as well. Now, showing you guys a little bit more in depth of what this could look like. If you see momentum candle, you basically have a very bullish engulfing. An engulfing candle is anything that is engulfing the previous candle, meaning it is pretty much bigger than the previous candle. And you have another strong body candle. You have another strong body candle and another strong body candle. This all indicates strong buying momentum, which if you're trading this in the beginning of wave 3, you clearly know you're in the right to take this move. Now, same thing goes with the bullish engulfing candle. Like I said, you got all of that happening here. And then you have your market shift, which breaks the internal structure. So if you combine your structure with momentum and this whole entire framework of what we're talking about, catching this the very beginning of wave 3, you, my friend, caught the perfect sniper entry pretty much to jump in, catch as many pips with low risk. Now I want to get into my favorite part, which is the Fibonacci framework, the map. So when you're drawing out your text, so when you're looking at, so now I want to get into my favorite part, which is the Fibonacci framework, the map. This is how you would know how far wave 3 will end. So here's a prime example. Have you ever, as a trader, tried to get in a setup, and as you get in a setup, you realize, damn, this looks pretty high. I don't know if I'm gonna get in too late, and price is right here. And maybe you caught that pullback, but you're like, damn, should I buy this? Well, with the Fibonacci, you would know, like, if you pay close attention, the end of wave 3 on a higher scale will essentially be ending here. So you have a lot of opportunity. And then this will also build your confidence up, because you know for sure if there was a pullback, you will not get scared to get out the market because you still know there's still a lot more momentum that needs to be created in wave 3. This is why I said earlier in the video, you need to understand the wave, where you're at, also understand how Elliott wave theory works. So essentially, if we draw out our fields and play it out the right way from A point to the B point, we would now know where that -27 point is at, -27 and the -618. All we need to use is these two levels to give us the overall direction of where market could go and where market could pull and where market could create the new structural high or the new structural low. Think of Fibonacci as a GPS. This is literally how you can identify where you are heading next. And that is almost the best cheat code that I came up with in my 6 years of trading and also learning from a lot of my mentors. Now, after establishing that, the next important thing is trading in a good time session. The best time session to trade is going to be New York when we're dealing with anything from oil, NASDAQ, US 30, S&P 500, anything when the index or anything in the commodity section, and even gold. The best setup you can catch this is literally at opening and towards the end of closing of New York. So for instance, if you're looking to trade, let's say US 30, try tapping into 9:30 Eastern time. Hopefully you would catch the end of wave 2 going into wave 3. And by the way, if any of these sound too complicated, I literally have another video that I recorded like 2 years ago of Elliott wave, which gets a little bit more in depth of what I'm referring to when I'm talking about Elliott wave theory. But at the end of the day, wave 3 is always going to be your best friend because it's the longest trend in Elliott wave. And this is the most aggressive trend, what they call impulsive wave in Elliott wave. So you can make a shit ton of money with this. Now, going back into wave theory, what I talked about, this entry method is built off of wave 3 of Elliott wave, like I said, because it's the longest, the strongest, and the most predictable wave in Elliott wave. And this is why a lot of traders that do trade Elliott wave, like myself, know wave 3 is where the money is really at, because it is the most aggressive, the most intensified wave, and the easiest predictive wave to catch in any trend. And I'm telling you guys, every trend has essentially 5 waves. You just have to understand how to spot it out using the fib retracement and even using the fib extension tool. So I hope this video made sense to you guys. Now, I know it might not be something more in depth, and that's completely fine. This is why I do a lot of videos on my YouTube channel, and I highly suggest you subscribe to my YouTube channel so you can learn a lot more. But if you guys still want to get more in depth and get more picky on exactly this model plus more, and also even get payouts, you can go ahead and tap into tradewithsolo.com, that is down below. Or you can also get access to our free ebook as well, which gives you more in depth of how to be consistent and profitable. Other than that, I appreciate it. Your boy Solo, I'm out. Peace.